As of November 24, the natural gas market is experiencing volatility influenced by supply-demand dynamics and seasonal factors. For funds like BOIL, ProShares Ultra Bloomberg Natural Gas, and UNG, United States Natural Gas Fund, which track natural gas prices, and KOLD, ProShares Ultra Short Bloomberg Natural Gas, which is inverse leveraged, outlook hinges on US export growth and moderate domestic demand. The Energy Information Administration, EIA, forecasts higher average Henry Hub prices in 2024, driven by increased liquefied natural gas export and slight supply constraints. BOIL and UNG may see gains in global demand, especially from Europe and Asia, increases amid winter and geopolitical tensions, while KOLD could benefit from any unexpected downturn in natural gas prices due to mild weather or excess supply. G'day folks, welcome back to another update for natural gas. Before we go any further, make sure you hit that like and subscribe button to support the channel. So first off, we look at the trends on the monthly, the weekly and the daily for natural gas. On the monthly, you can see we're still above the moving average, bullish on the CCI 150, and you can see there the price is about to break through that moving average band as well. On the weekly, we do still have it's actually broken into a neutral positioning. We've had a bit of a decline on the CCI 150. It's broken into that moving average band, and you can see there the price has pulled back to the towards this moving average on the price chart, but also this week is showing a bit of a bullish movement at the moment. On the daily, we're predominantly bearish, have been in the last few days. Now it's retraced back towards that moving average on the CCI 150 and still below that moving average band, and looks like it's going to break further to the downside. So that's looking like a fresh breakout to the downside. Likewise, the price chart is also below its respective moving averages, so bearish trades should be taken predominantly if you're trading on the intraday. And here we've got the intraday chart, and again, based on the daily trending short only, we would be taking short trades only, as indicated by the arrows. The arrow on that one's not drawing, but you would have taken that short trade there, and you would have closed it out near that bottom there based on the CCI. I prefer to exit an entry on the CCI break below and above the moving average band. It gives you an early exit. You can see there that would have given you a close near the bottom there almost, and the price has still got a bit of ways to go before it hits that moving average band, but the CCI is actually broken through, and it may well break further to the downside in the coming hour or two as we speak. For BOIL, that's still very bearish on the monthly. There's no CCI for it on the monthly. On the weekly, we've still got this bullish divergence on the CCI, higher lows versus lower lows on the price. You can see there it's actually edging slightly lower since our last update. On the daily, for BOIL, you can see that it's already broken through that previous support at 814, and we're still in a bearish outlook at the moment below its moving average band of the CCI. So again, further only short trades to be taken. So looking at the intraday, short trades only based on the daily. You would have taken that last entry would have been when it broke below the CCI there and below the moving average of the price chart. So that would still an open position there at the moment. So taking short positions only at the moment. For KOLD, this is the inverse stock or ETF. So you can see there it's broken above the moving average band on the monthly. There's no CCI for it on the monthly, but bullish movement on the monthly. On the weekly, it's also bullish above the CCI moving average and also above its respective price moving averages. On the daily, that's also bullish, and you can see there it's retraced a bit, then it bounced up again with a fresh bullish break in the last 24 hours of trade, and it looks like it's approaching this previous resistance we drew some time ago at 85.10, and it may well break through that possibly if this bullish movement continues. If we go to the intraday charts, again taking long trades only in the direction of the daily, you would have taken some long trades during this period. Avoid taking this short trade, and you'd be back in a position taking long trades only at that point when it breaks above the moving average band of the CCI, but also above the moving average of the price chart. And again, you'd still be in an open position on that one and wait for it to break to the downside, either below the moving averages of the CCI or the price chart. Again, I prefer to take it when it breaks into that moving average of the CCI, because you can see there, had you taken a long position there, that would have given you an exit point on one of those two bars up there near the top there, and you would have avoided losing that little profit based on the price. Again, I prefer to take it when it hits the moving average band on the CCI. For UNG on the monthly, bearish on the price chart, and you can see it's a fresh breakout bearish on the CCI 150. A very narrow band on the CCI, but it's bearish nonetheless. On the weekly, let me blow this one up. You can see there we've still got a bullish movement on the CCI versus lower lows on the price. Now you can see there that's actually a double bottom, and it may possibly bounce from there. I've drawn that trend line there. But before we start measuring how far it's going to go, we'd like to see it break higher above this moving average band to then start drawing a Fibonacci retrace. But at the moment, it looks like a very long-term bullish divergence. If we go to the daily chart, you can see there it's struggling to break through that support we drew at 1257, although the CCI is persistently breaking lower and breaking below that moving average band. So we may see it break below this support further to the downside. And on the intraday, again taking short trades only in alignment with the daily. On the hourly, you would have taken that last entry there. That would have been your last entry point on that red candle, and that's retraced ever so slightly, and we may see further downside. So again, hold it until we see the CCI break into that moving average band to close out your positions. To support the channel more, hit that like and subscribe button and share the video. For added benefits and the cost of a coffee, consider subscribing to the Patreon page where we look at weekly scans of bullish trending shares and insider trades that may have occurred. Thanks again, and see you in the next video.